Okay, folks, welcome to the Contrarian Trader. This is Bob Desmond, and this is our members' stock pick request video. This is a service that we provide free to our members where I review the symbols that they submit on video. We take a look at the charts, and then I even do a follow-up on Market Wrap, which will go out tomorrow afternoon, where I'll quickly rehash the symbols once again, and we'll see. Was I right, wrong, any change? And it's really not a test of me per se. It's just that I want to follow up and see whether or not my directional call was somewhat accurate or completely off base. I started it last week. Great feedback, and I plan on continuing it. All right, so let's get to a bit of commentary first. Today was a huge day in terms of a GDP report that was issued. The markets had expected GDP growth of 1%. We got 0.2%. Janet Yellen, the Federal Reserve, met today. They released their decision on rates. We obviously knew there was not going to be a rate increase in April, but the so-called smartest guys in the room, the fancy pant, well-dressed, slick back hair, Wall Street thugs, they have been forecasting a June rate hike. And I have been telling my members for months, literally months now, that there is no way in light of the economic data that is being released that they will raise rates in June. And I reiterated it last night on Market Wrap. Sure enough, today, the Federal Reserve in their statement couldn't be more dour on this economy. And they used a phrase which I found interesting, and it was repeated by every single talking head that spoke today, and that word was transitory. Everybody had to pretend that they knew exactly what a transitory factor was, and they put it in their own description. Let me put it in the way I describe things. Transitory means an excuse. Whether it be the weather, whether it be the strong U.S. dollar, all it is an excuse of as to why the economy is weak and will probably get weaker. Next quarter, it will be a different excuse. We are now into year 6 of this so-called recovery. At the beginning of the recovery, the Federal Reserve had $800 billion worth of assets on their books. They now sit with over $4 trillion. That $3.2 trillion worth of additional debt that they put on their books is all the debt they accumulated from quantitative easing. And what did we get for that $3.2 trillion worth of debt that my kids will pay for and your children's children will pay for decades to come? 0.2% growth this past quarter. It is criminal. I digress. Let's get to the charts. All right, let's kick things off first with the S&P 500. First, we need to identify the health of the overall market because 80% of all stocks trade with the parent index. So we'll take a look tonight at the S&P 500. I believe I'm going over the IWM later on today when I discuss the TZA. So we'll touch upon the small caps as well later on in the video. But the S&P 500, how did it react today? It was down, obviously, about a third of a percentage point, slightly more. It closed off the lows of the day. But, folks, we are really beginning to deteriorate here. In the day and age where now we have to worry about dark pools, and if you're not a member, join and you'll learn what a dark pool is. In this day and age of high-frequency traders, if you don't know what that is, join, you'll learn what that is. Because if you don't know what a dark pool is, and if you don't know what a high-frequency trader is, you are going to get killed in this market. And I have a new tool in the toolbox which helps me identify the type of buying that is being done in the S&P 500. And in the past several days or even weeks, you are seeing dark pool distribution of the SPY, the spiders. They are selling it. When they move out of stocks now or indexes, they make no big splashes like they once did, meaning the institutions, your big mutual funds, your big pension plans. They sell into dark pools. They sell within bracketed price ranges. And then what causes the spikes are the high-frequency traders. So what you're seeing I can't show you in this chart. I have a different charting system. What you're seeing is dark pools selling, and when you see volume spikes to the downside, which you saw today, it is high-frequency traders moving in and following the institutions, the large institutions, down. So my guess is that we will break and we will proceed down. I am not bullish on this market at all. I could be wrong. We could head higher. Would I short this market tomorrow based upon my observation of what the dark pools are doing today? No. The path of least resistance remains higher for now until we break. First stock up tonight is Cal-Maine Foods, CALM. This is a stock that was at extreme overbought levels. It still remains at fairly overbought levels. It was leaning into its third standard deviation Bollinger Band. For those who don't know what that is, the third standard deviation Bollinger is a higher level customized Bollinger Band. If you're using the Bollinger Band on your software system, more than likely it's a 2 standard deviation. A 3 standard deviation, a stock is not supposed to be spending all that much time leaning into the resistance level. And in fact, yesterday we shorted CALM, booked profits, and we were looking to get short once again, and it just sold off. I think that we're going to head down on CALM. If we pull back in an orderly fashion and find some bottoming tails, meaning support below, you may see a move higher, but we are at historic resistance. The next resistance level is at 47.36. We hit it yesterday, couldn't hold it, failed, broke down, and here we sit. I would not be a buyer, and I think the ship has left the port if you're looking to short the name. FEYE, FireEye, nice orderly pullback. I think we're going to consolidate here. Volume, very, very light, moderate. I think we consolidate and head higher. I love this sector. NRP, Natural Resources Partners, monthly chart. The reason why we're using a monthly chart is because it's something I call multi-period charting. The daily chart is sloppy. It doesn't give you a direction, a plan, on which to follow so you could trade NRP, which I'm assuming to the long side. I wouldn't touch NRP until we hit $4 and let's call it 80 cents. And the last time we saw that support level was back in 2003. We're going to hit that support level. We may see a rally in the short term. Let's go to a daily chart real quick. Daily chart. Note the bottoming tails here. We may see a rally higher. I'm of the opinion that we will roll over and continue down lower to that historic support level, which I just pointed out, at $4.80. Note the distribution bars. EXXI Energy 11 Limited, I guess. So daily chart. I think the last time I reviewed this chart, we were trending higher, and then we broke. I can't condone buying these shares. I wouldn't short them right now, but I certainly wouldn't buy until we... Otherwise, I would avoid it like the plague. If we rally, close back above this resistance level, the 3-day rule applies, meaning you have to close 3 consecutive days above that level, then you can look to buy. Now, the key to remember is if you do get that rally, that this prior lower band of the rising uptrend channel here, which was prior support, is now going to act as resistance. Keep that in mind. You're seeing a double bottom setup on RSI, so I'm not going to be a bit surprised to see them rally the shares. The question is, does it break out above resistance? I don't know. Right now it's in a megaphone formation, meaning that it's putting in lower highs and lower lows. That's not a good formation if you're looking to get long. It's got to reverse itself. Okay, next ETN up is the TVIX. This is the Velocity shares daily 2 times VIX. Basically puts you twice long of the VIX. Very, very volatile. Weekly chart. No new weekly low. We've had a brutal 2015 thus far. Let's go to a daily chart. See how it responded today. All right, so we're up 6 cents on the day. Yesterday, we flashed a bearish key reversal, no new low, which is good. Let's take a look at the VIX daily chart, which acts as its parent. As goes the VIX, so should the TVIX, which isn't always so. Doji star formation today on the VIX, which implies that the trend, which has been down, may in fact reverse. I think that the TVX heads higher, as does the VIX. UUP, this is the US dollar bull ETF. The reason why we're going over the UUP is not so much because it was requested of me. It's because a lot of the names I'm going to be going over next are sensitive to the US dollar. As goes the US dollar, they may go inversely or they may trade in tandem. But we need to understand and appreciate the inverse correlation that some stocks, ETFs, commodities, whatever, have with the US dollar. So the US dollar gapped down today. We found support at prior support 24.85. Strong distribution today. So right now, what we're looking for is, ideally, if you're looking for to get long of the US dollar, is a consolidation. If we spike higher tomorrow, more than likely you're going to see sellers move in and drop it down once again. Okay, so the first stock related to the US dollar and which benefits from a pullback in the US dollar is Hero. This is for fellow member Ron. Okay, so back in late February, early March, Ron sent me an email. What do you think? And it appeared as though it was in a death spiral. And we have since rallied about 200% since the lows. So congratulations to you, Ron. Always happy to see a member do well. The weekly chart looks strong. Now, what I like about this chart is that we are flagging out. Let me draw some trend lines here. I said trend lines, and actually they're support and resistance lines. This is a flag formation. It is a very, very powerful formation. Why is that? It's because it's a sign that you are having a orderly pullback off of a massive move higher. This is a consolidation pullback. It's very, very healthy. And what I've learned is that high-frequency traders love this pattern. So me, I would personally remain long, and I might even look to add in advance of a breakout, not a huge amount, in advance of a breakout on Hero. Now, if we do break out, and assuming that it hasn't really gapped higher away from this upper band of the flag formation, I would look to add more on that breakout as well. But if it really just clears this hurdle, and if it leaves a lot of space where it previously closed and to where it now has opened, I would not chase that. Because those are high-frequency traders gapping it higher, and what they'll look to do is they'll look to sell into the small guy. So now is the time to add to your position and then add more, assuming that you get an opportunity on a continuation breakout. Daily chart of Hero, double bottom setup on RSI, and look at this. We're breaking out of a flag formation on a daily chart. This can be bought. Hero looks bullish. Good volume today. Expect these Stokes to loop back up. Now, what might hurt Hero is a rallying U.S. dollar, so keep an eye on that dollar. Wheat, another commodity play. We are in a downtrend right now. We bounced off the lower band of that downtrend. I really need to see a breakout above this upper band of the declining downtrend channel. We need to see an end to this long-term downtrend. You can add on that breakout and then look to add more on a breakout above this primary downtrend line. And then you can add more above 1150. This should have been a nice, healthy double bottom setup. It failed. It broke down to new lows. So this was the prior pivot point, 1150. I would look to add more aggressively on a breakout above 1150. But you can build as we begin to break out above these resistance levels. And I believe Jesus requested this chart. Volume was good. Double bottom setup on the Stokes looks good. All right, so you're seeing reasons to be optimistic on the indicators, but in price, not quite yet. Harmony Gold, weekly chart. All right, the dollar's dropping. This is another dollar-sensitive play. The dollar pulls back. Harmony Gold, the junior gold miners, the GDX, they should all do well. So in late 14 and early 15, the gold mining names, they really bucked the strength in the U.S. dollar and did really, really well. And then they collapsed. We had a breakout point failure. What's a breakout point failure? We broke out above this upper band of resistance, rolled over and broke back down into this trading channel. Now we need to see whether or not this is going to hold. 1.67 critical support. If you're going to buy this, no matter what I say tomorrow, you got to put a stop loss just under 1.67 and get out. Now, if we close above, let's call it 205 per share, above this declining downtrend line, the upper band, then you could look to buy it. Until then, I wouldn't touch it. YGE, Yingli Green Energy Holding. I think I went over this one time before, a long time ago. All right, so we are in a declining pennant formation. We have a double bottom setup, which is bullish. We broke out above this long-term downtrend line, rallied up to 2.13. We have since pulled back, and it did exactly what I love stocks to do. It retested prior resistance, and it held. Therefore, this now becomes support, and that's what you should expect of it. So it passed the test. So this would have been a good opportunity to buy right here. Now you're looking to buy into resistance. Not quite yet. I need to see a breakout above this resistance level or a pullback and a retest of this lower band of this pennant formation. But if we close down below 1.78, you got to get out. It's probably going to head considerably lower. But I see reasons to be optimistic. I don't like that Williams percentage R is rolling over. I wouldn't go buying it just yet. I'm not getting any signs from the indicators that we are strengthening. In fact, it's telling me the exact opposite. We appear to be rolling over on RSI. And sometimes they send you false signals, and that's quite possible. Like right here, Ultimate Oscillator is looping up. So we'll see. Price action and volume action trump all. Watch the price and volume action. Mid-States Petroleum, weekly chart. Again, multi-period charts. The daily chart is useless to us with this stock because it's a little bit noisy. I want to see how this stock is really setting up after this very, very serious sell-off. So we bottomed out at 72 cents. We rallied all the way up to $1.30. Now we are flagging out. I just went over flagging on Hero, H-E-R-O. If you didn't watch that, just hit the table of contents. You can go back and click on Hero, and it'll bring you right to that symbol. All right, so back to MPO. All right, so we're in a flag formation. We are holding $1.10, $1.05. Expect a continuation move higher. I'm fairly bullish on this name. Ultimate Oscillator moving higher. Slow Stochastics moving higher. Looks good. BTU, Peabody Energy. The damage that our federal government has done to this industry is just absolutely criminal. Peabody, weekly chart. This is a reversal week so far. It's looking constructive. A little bit of choppy action on the Stoch RSI. We need to see a breakout. Would I go buying it yet, though? Ugh. To do that, I would first need to see whether or not we have historic support. Let's go to the monthly chart. Okay, monthly chart. And this is the value of multi-period charting. It's what I teach my members. And now I have an entirely different view of Peabody Energy. Why? It's because now I'm looking at it from a monthly perspective. Let's draw some trend lines, get all happy with ourselves. We're going to color. I feel like a little kid right now, like I'm going to color with crayons. Okay, now monthly chart. We took our crayon out. We drew some trend lines. Now we have an idea of where we stand on a historical basis. Why is this so important? It's because we want to identify, as traders, an edge over other traders. Remember what you're dealing with nowadays. Algorithms, high-frequency traders, dark pools. It's not the market of 10 years ago. This is a completely, or even 6 years ago. It's completely different. Except some things don't change. One of them is identifying where prior support is because the algorithms are looking for that. They're looking for clusters of buy orders underneath these prior support levels. But what have we done so far this month? We should have held the support level. We didn't. We are currently trading below it on a monthly basis, one trading day left in the month. Now, if we rally back and close above, let's call it $4.85 by the end of business on the 30th, well then, completely different attitude. I'd be a buyer of BTU. As it stands right now, I think that we can head down to $4.60 if we close out the month below this support level. If it closes down below $4.60, we can head down to $3.68. And that would really coincide with where the lower band of this declining downtrend channel is. If we hit this target here, I would be a buyer all day long. That's the game plan with BTU. Molycorp, daily chart. All right, so the trend is higher. We have the lower band of the rising uptrend channel. There is definite resistance up here at 115. We're possibly making a lower high at 104. Watch for a retest and a defense of the support level. You have your 20-period moving average, which is rapidly accelerating here in dotted green line. That will act as a natural floor, a rising floor for the stock. So the longer it consolidates and it allows the 20-period moving average to play catch-up, the better the stock is in the longer term. So if you're long, I wouldn't sell it just yet. I would definitely put my stop in, though, right below, let's call it, if you have a loose stop that you want to put in, right below 75 cents. If you want to keep it tight, keep it about 83 cents thereabouts. Next stock up, Facebook. Okay, Facebook is not looking good, folks. I'm a big fan of the company. Well run. Making all the right strategic moves, but in their investments, their expenses are going higher. Therefore, the stock is getting hurt. So they're investing in their business, and the fact they have no ROI yet on that investment is reflected on the chart. We put in a lower high, prior high 86.07, new high is 85.59. This is a double top. Now, I wouldn't ordinarily call this a double top unless we broke down below the prior support level, but we did. We broke down below 80.37 because we pulled back, bottomed out at 80.37, rallied up to 85.59. Now we have broken down below this key support level. This is a continuation breakdown. Now, if they gap it higher tomorrow and it consolidates above this now resistance level, which was prior support, my tune could change. But as it stands right now, this is a stock that's beginning to break down and volume is picking up to the downside. So I would not be a buyer of Facebook. I wouldn't short it, but I wouldn't be a buyer of it. TACO, formerly Levy. We shorted this one back here. I'm sure the commentary is on Stock Twits on one of the past members' stock pick request videos. We booked our profits down here. It has since rallied. Now it is struggling. They had a name change. And all the small investors thought that that was going to send the stock higher. It didn't do anything. In fact, I was looking at LOCO, one of its competitors today, and it was really breaking down 6% on the day. So to be honest with you, I'm surprised that TACO held up so well today. I think it's partially an issue with the people trying to find the stock symbol because they just changed it yesterday. Volume was only 80,000 shares, and that's the lowest volume day that we've seen since before this big run-up. So I think that TACO is heading lower. I think it's been a highly manipulated stock. I think the high-frequency traders have manipulated the hell out of this stock through using 100-share purchases to hit the ask and give the illusion that you have true buying on the part of institutions when, in fact, you don't. There's a huge bid-ask spread. You have a possible double top here. Note how I'm calling it a possible double top because we haven't broken down below 1354. If we broke down below 1354 tomorrow, I wouldn't be the least bit surprised. More on this one tomorrow. In fact, more on all of these tomorrow, especially the ones where we have an interest in, and all of these I have a certain level of interest in because our members are interested in them, but some of them I am looking to trade. Some of them we already have, and some of them we will again. Last, in this case, ETF up is HACK, H-A-C-K. I love it. Flagging out, flag formation. I think it heads higher. We'll be looking to buy on this pullback. We just booked profits on CYBR yesterday. It reversed today. It's probably going to head higher. So, yeah, am I kicking myself a bit? Yeah, a little bit. But we made a lot of money on it. So we'll look to get back into CYBR or FEYE. HACK I'm looking to add as a long-term play. But I like CYBR as well. HACK looking good. Okay, the last two charts up are really for the sole purpose of discussing the TZA, the Direxion Daily Small Cap Bear Leveraged ETF. It moves 3 times the move of the Russell 2000. Now, this is a very, very volatile ETF. If you are risk adverse, this is not for you. Highly volatile. That being said, I'm extremely bullish on TZA. RSI breaking out. We were in a downtrend, and technically we still remain in a downtrend, but we did break out above the upper band of this declining downtrend channel. We retested it several times, failed some. Then we broke back above it once again. Now we've pulled back, and on the 27th, we flashed a bullish key reversal. Very, very bullish for the TZA, which means that it should be bearish for the IWM. Let's take a quick look. And the IWM is not looking pretty. RSI breaking down. The 50-day moving average managed to act as support today. Volume was not that big to the downside today on IWM. Now take note of the TZA, which had very, very high volume. This is why you need to use both of these charts whenever you're taking a look at these ETFs, no matter what ETF it is. You want to take a look at the parent ETF because these are trading vehicles. They're not long-term investment vehicles. So what you saw here was a ton of trading in the TZA today. So this price action that we saw, this huge accumulation, is not technically accumulation. There was a lot of trading in the TZA because we did not see distribution on the IWM. Now, had we seen big down volume bars in the IWM, then I would have said there was accumulation of the TZA. Technically, there was a lot of trading in and out of TZA. Net, the bulls won. So I still like the TZA, bearish on the IWM. And this is pretty much consistent. If you go back to my earlier videos on YouTube, or if you're watching this on Stock, Twitch, or Twitter on my blog, go back to January and February. I predicted that this market was going to sell off. I'm still standing by that. And that's it, folks. Members will be reviewing all of these symbols again tomorrow on Market Wrap, and I will talk to you tomorrow. Everybody have a profitable trading week, and be careful. Expect volatility to pick up, folks. Even if you're not a member, I don't want you losing money. If you're long of this market and we begin to break down below key support levels, like I'll be discussing with members, you need to use stop-loss orders. Get out of these positions. Move to cash. If you don't feel like shorting the market, that's fine. Move to cash. Build up your reserves. There'll be great buying opportunities out there in the future. That I can guarantee you. Have a great evening. Be well.